Hey everybody, Dow Jones Dave here, getting my face ripped off today. And I'll tell you how. I sold the calls yesterday after I made back all the money I fucking lost messing around in a formation when I shouldn't have. I know better. I know to wait for it to leave the formation. I tell you people, wait till it breaks, well, I wish I'd just take my own advice. I didn't wait for it to break out of here, and I bought long contracts. And it didn't break out to the upside. I was expecting just a little rally, up to, right, somewhere around here, and then a decline. And that's for today, by the way. But instead, we went down, and I bought more contracts. We went down, and I bought more contracts. And I'm all stuck in it. Well, I actually bought contracts here, and I'm down like 19% on the positions, which are $200, 6 contracts. Fact, let's take a look. There I am, getting splattered all over the place. And of course, we still have these leftover Tupperware puts that were a hedge for a call that was successful. And they're going to expire worthless and cost me like half my profits on that trade, but that's okay. When a stock's going up 50% a day for 3, 4, 5 days in a row and you take a call on it, you better take some deep out of the money puts to protect you from catastrophic loss. So anyway, we're gonna chart this stuff. So I've been watching for this to break. So now we have a new trend, and it is established. It's fallen back far enough away to be symmetrical with that move. This is the move you want to be symmetrical with, by the way. And so we're there. And we also have this steep ass downtrend that could get retested, in which case we're just steepening the trend and gonna just go down further. So I'm hoping it doesn't do a full retest. A double bottom would be okay, but still kind of iffy because it would be so much larger than this move. You want the move off here to be equivalent to the move up there. In other words, up, down. So we're about there. And I'm hoping the market will rally. We're watching this in real time, by the way. So you see it's coming down, and that is forming what we hope will be a shallower trend. On the closing basis, a shallower trend than this one. Then hopefully the next one will be flat, and then the next one will be up. And this is a 5-minute chart, so all that stuff is going to happen fast. And you can see where, it started to pop and I bought, and it was just a big mistake. And I didn't sell, and that was a big mistake. And I have more funds, but all of my available funds are in now. I have no reserve, so it either goes up from here. I have a reserve for tomorrow. I had other positions, but I sold them all when it started to tank. So, well, actually, those were already sold one by one. They started to tank, and I sold them. Just some stocks, So now we have this. Now, what I have is 6 put contracts on the SPXS, which is a short contract. So, which is a short, SPXS is a triple leverage short fund, Standard & Poor's. Short Standard & Poor's fund. So, we're watching this now. I use closing charts just because the formations are a lot clearer. Closing prices are better. I would call that a print, So we definitely want this bar to close down. We don't. Oh, no. We don't want it to come up. What we do, but for the cleanest technical break, we want a nice symmetrical up, down right here. I mean, I'll take whatever I can get when I'm down 19%, which is 10% down on the entire portfolio. And I think it's even more than that because, of course, I, had to pay commissions and spreads and get the hell out of the stocks that were going the wrong way. And why am I bullish? Well, the rally yesterday was insane. It was just insane. And if I hadn't been dicking around in the trading range so long, using up all my buying power and stuff, I would have done a lot better yesterday. In fact, if I had just, looks like if I had just stayed short, I'd be doing great. And my barometer's at 107 yesterday, and I know that the market really can't get any legs with the barometer that high. It just can't be done. There's too many stresses on it. But it doesn't mean it can't rally for a day and put in a good gain for a day. And I'm hoping what we're going to get is a rally at the end of the day. I mean, by the end of the day, and where the S&P is actually positive, in which case I'll do really well. But I will probably sell as soon as I make back all my money and get out and come back in tomorrow. Now, if it goes down, if it breaks this bottom right here, I'm out. I'm heading for the hills. I had enough. And that won't put me down too much from where I am now, maybe $1 or $2, because the options are now kind of getting out of their reactive zone. And I've talked about reactive zones before. When you get too far out of the money on an option, it won't react unless the underlying asset moves a lot. And I don't like those options. That's why I said, I usually trade a month out, and minimum contract cost should be 10%, should be equal to the stock price. So your contract, your 100-share contract on, let's say, Oxy over there on the right at the top, if you want to see what stocks I've been looking at. Oxy on the right, up there, in the columns. So if you look at Oxy, what was I talking about? I can't remember what I was talking about now. I got distracted telling you where the Oxy was. Oh, look at that. It broke out. Now we'll see if it's real or Memorex, because this is real narrow. It's kind of barely acceptable as a shoulder. I'll take it, but you would really want to see it come a little bit lower before it breaks out. And but I'll take any up move I can get right now, since I'm getting my face ripped off. And so as far as intraday, this would be where the prime buy point is. And this is my mistake. I didn't really wait for a formation, except for this box, and I didn't wait till it broke out of the box, which I should have. I'm an anticipatory trader a lot, and sometimes that's costly, and sometimes it's really, really, really profitable. If you get in before the actual signal flashes, it usually results in really, really good gains. So anyway, I am trying to cure myself of over trading, and that's why I didn't sell anything. Also because I don't have reserves until tomorrow, because stocks I bought today, calls I bought today and then sold, the money's not available till tomorrow. So, like for instance, if I sell XPXS tomorrow, the funds will be immediately available for trading. If I sell it today, I'm out. I'm out of the game, and gotta wait till tomorrow to do anything. So I'm gonna sit here and wait to see if there's a rally, and it looks like there is a rally. And what I was actually going to show you is what I do is on every closing bar that has a peak, we move from our pivot point, like it was here, and then it actually ended up closing up, so I moved it up. And then you see one trend line. Oh, here's our less shallow trend line. The next one should be level, and then we move into an uptrend. So anyway, I just wanted to outline that, and we might as well watch this a little while longer. See, it's going up. So this is a valid trend break. So we need a retest, though. But it may not retest. It's so stretched down that it may just pop. Let's hope it pops. Well, not if you're short. So, there's a thing either. What's the magnitude? I have no choice but to trade on a short magnitude, because because I can't do weight. I can't do red. I can only handle so much red, man. And I tell you, the red I'm seeing today it was right on the border of more than I could handle, and get me out of here, But that's what happens when you're really trading, and that I'd like you to know that that's the difference between me and a lot of other market pundits. Is what I'm telling you I'm doing, I'm really doing. I've got money on it, and so if you follow me and shadow one of my trades and you get your face ripped off, well, I'm right here with you, man. And I know it fucking hurts. However, I didn't disclose this call contract. You know what? I guess that means I shouldn't have done it because I wasn't confident enough about it to make a video like I am confident enough about this pattern to make a video. Which, I don't know, we may get a technical failure. If it falls below this trend, I'm not going to wait. I'm going to be out. You see, this whole thing is a technical failure. Where is it? On the 4 hour? Yeah. Got 1, 2. How many dips do we get off a trend? 3. Any established trend, unless it steepens. So sometimes they'll go 1, not quite, and then you have a new trend that's steeper. Okay, that usually happens like right at the beginning, like it's probably on the verge of happening on the daily here, because the barometer's over 107, and we're in August. Market typically tops in late August, so, I've been watching the market a long time. It typically tops in August, and not usually early August. That's what I meant in my last little trade diary video when I said it's a little bit early for the market to make its final top before it really takes a dump. And but here's a technical failure. 1, 2, 3 dips it should have took off, but it didn't. And oh man, right back down to new lows, and that's what a technical failure is. And I've talked about technical failures a little bit before, but they should be mentioned now. On a technical failure, the market always reacts violently in the opposite direction that then the formation would indicate. So you got 1, 2, 3. You would anticipate the next time it comes up to it, it's going to penetrate it, but it didn't. Instead, I mean that's just bloop, straight down. Also about right at the bottom of the channel, and it's actually here. These are all trend lines. So let's get back down to the 5 minute and see what's happening. Okay, it's right on this. When it moves above that, you got clear sailing, because that will be, well, where would a downtrend be? It would have to be on this pivot. Let's just move this down, since we know we've got level. What's the word for that? We know we've got. You see, if this rises above here, then there's no opportunity for a downtrend anymore from this point. See what I'm saying? So once it breaks this line, the next pivot point becomes here. And we would move this as appropriate until we get a close. And you don't do it until, because it could pull back. Not usually. When you see this little pattern here, it usually doesn't pull back. So I will say that. So now we're above it. Remember, I'm not thinking about getting in. I'm thinking about watching it to sell if it collapses. I'm already in. But if I was trading and I had any more funds, I'd be loading up on it about right here. Or maybe I'd wait for a retest of this line. But I don't have any funds, so I can't. Got to wait till tomorrow.